Hi, I'm Romeo Caparaso, and I'm a business owner and accounting firm taxaccountingadelaide.com, and today I'm just going to go through some tax basics for any of those who are relatively new to Australia, and just explaining some of the basics about our Australian tax system so that you can adapt quickly to not getting into trouble with anything in our tax system. Okay, so let's start with some basics. Basically, workers and businesses must do annual tax returns. So we do our tax returns in Australia on an annual basis. Our tax year, or the Australian tax year, goes from the 1st of July to the 30th of June, and it's commonly referred to as the 2015 year, which may mean that that's the year finished 1st of July 2014 to 30th of June 2015. Our tax enforcement agency is known as the Australian Tax Office, or more commonly referred to as the Tax Office, or ATO. Let's start with how the tax system actually works in Australia. Basically, our tax system works on basically a simple formula, and it's income less deductions, which we calculate what the tax office calls taxable income. So this taxable income is then taxed at progressive tax scales. Now, your taxable income, let's remember, is income minus deductions. So let's just go through some examples of income. Income's most common form of income is perhaps wages that you earn at a job, but additionally it could be interest that you earn on your bank accounts, it could be dividends from shares, it could be business income, it could be rental property income, and deductions may be commonly what expenses you incur in order to earn your income. Some things are allowable deductions, such as uniforms or protective equipment, tools purchased for work. You may use your personal vehicle to travel on site to do work, or travel in between branches or in between two jobs, which is tax deductible. You may have union fees, for instance, or you may have incurred some expenses in upgrading your knowledge which relates to your work. These are all examples of deductions, and so these deductions can come off your income to get what we call taxable income. Now, taxable income is taxed at the progressive tax rates, which I will show you in a moment. This tax on taxable income, less tax paid during the year, such as your employee tax, which is taken out of your wages, will calculate whether you get a tax refund or an amount payable when you do your tax return at the end of the year. So if you've had enough tax taken out of your wages over the year and you go to do your tax return and it's too much tax, you'll get a refund. If it wasn't enough, you'll have to pay some extra tax at your tax return. Typically, your wages should take out enough taxes during the year, and you only need to pay extra tax if you've had other forms of income which haven't been taxed during the year, such as interest, to give you an example. Refunds, tax refunds, are now only paid into bank accounts. So they used to be paid by checks, but now you need to have a bank account so that they can be processed and credited into, and they're normally paid within 30 days if everything goes well. You also need to keep your receipts of your deductions claimed for 5 years in case the ATO wants to check on them or audit you. Okay, as I mentioned earlier, I wanted to show you our Australian tax rates. The first 18,200, if you're a resident for tax purposes, is taxed at 0. Following every dollar above 18,000 is taxed at 19% until 37,000. Above 37,000 you are taxed at 32.5%. and then above 80,000 it goes up to 37, and then above 180,000 it goes to 45%. This does not include additional taxes such as Medicare levy and the budget levy, repair levy, and these are also subject to change every year. And you'll find those at every annual government budget night, which announces changes to the tax rates. Now, how can you lodge or send your tax return in? Simply, you can use a tax agent such as myself. Basic typical fee may be $143 depending on the complexity. Maybe a little bit more if it's more complex. Or you can lodge your own tax return using the ATO software called eTax. So make sure you use the ATO software called eTax. I've also written a little blog about, is it worth having a tax agent? And you're welcome to read that at taxaccountingadelaide.com. Is it worth having a tax agent? If you permanently leave Australia, here's some quick tips. Keep your bank account open until you get your final tax refund. Make arrangements with your tax agent before you're leaving so that they can complete on your behalf your final tax return while you've returned to your other country. So they may make an arrangement with you to sign your tax return via email, because they can't lodge the tax return before the end of the financial year. So if you want to leave in April, your tax agent won't be able to do your tax return until the end of the 30th of June. You'll also need to contact your superannuation company and advise them you are withdrawing your investment and permanently leaving Australia. Again, they'll want to pay that into an Australian bank account. So there you go. I've answered some questions if you're newly arrived in Australia and you need some assistance with your tax, or need a tax agent to help you get off to the right start and do your tax returns and establish a long-term relationship. We'd love to meet you. You can contact us through our website or book in through this number 83374460, and our website is taxaccountingadelaide.com. Thank you.